Hello, my name is Richard Zaro. I'm a junior in the Applied Investment Management program at Marquette, and I cover domestic information technology. Today I'm pitching Knowles Corporation, ticker KN, with a price target of $28.09, representing a 30.1% upside. Knowles Corporation is a manufacturer and supplier of advanced microacoustic, audio processing, and precision devices, and it serves the consumer electronics, medtech, defense, electric vehicle, industrial, and communications markets. It derives 76.8% of its revenue from its audio segment and 23.2% of its revenue from its precision devices segment. Their clients are original equipment manufacturers, contract manufacturers, and audio and precision device suppliers in the US, Asia, and Europe. The company was founded in 1946 and is headquartered in Itasca, Illinois. Over the past few years, Knowles Corp has aggressively built their business investing into new innovative technologies in the audio and precision device industries, with upwards of 10% of the revenues being invested into research and development. Knowles supplies its OEM customers such as Apple with acoustic microphones, balanced armature speakers, audio solutions, high-performance capacitors, and audio processing technology. KN has a market share of nearly 30%, and they are well positioned for capitalizing on the high expected growth of the consumer audio market, which is forecasted to grow at a 14.2% CAGR through 2026. Meanwhile, the precision device market, which is expected to grow at a CAGR of more than 8% during the same period. The company has a current liquidity ratio of 2.3 and holds $147.8 million of unrestricted cash and over $131.4 million in short-term receivables. Through strategic acquisitions, their most recently obtained integrated microwave for a purchase of $80.7 million, $27.7 million of which accounted for customer relationships, the company has started to significantly expand its capabilities. These acquisitions not only expanded their reach and customer base, but also added operational efficiencies leading to greater margins and revenues. For instance, operating margins increased by 3% and revenues rose 16% from Q2 to Q3. Because of the increased need for Knowles Corp's products from mobile, ear, computing, and Internet of Things markets, it is recommended that KN be added to the AIM Small Cap Fund. KN's investment drivers include strategic acquisitions, growing market demand, and an aggressive share repurchase program. In strategic acquisitions, over the past few years, Knowles has successfully completed several acquisitions including DITF Internet Connect Technology and MEMS Microphone. In May 2021, they also acquired Integrated Microwave Corporation. KN has expanded their presence in profitable markets to a near 30% market share and increased their customer base through these strategic acquisitions, leading to incremental gains through increasing revenues, as well as providing greater margins by reducing costs. With the continued successful integration of these acquisitions, total fiscal year 22 revenues are estimated to surpass $950 million, which is a 10% year-over-year growth rate, with profit margins expected to increase over 3% year-over-year or than the previous forecasted figures. Within growing market demand, voice assistants are proliferating through a variety of applications, from mobile phones to headsets and from smart speakers to household appliances. KN's unique capability in MEMS microphones, balanced armature speakers, and digital signal processing place Knowles in a competitive position to gain a greater market share. KN's precision device segment faces much greater exposure to capital investment cycles and government spending, both direct and indirect. KN has experienced increased demand for products driven by the upgrading of large rotary radars, deployment of communication satellites, build-out of 5G communication systems, and the rapid replacement of combustion engine vehicles with electric vehicles. The audio industry is expected to grow at a 14.2% CAGR by 2026 according to the Market Research Future, as well as the passage of the Infrastructure Investment and Jobs Act worth approximately $1.2 trillion. KN is placed in a position to capitalize on the market growth and increasing demand. Within their aggressive share repurchase program, with their current ratio increasing nearly 65% from 1.4x to 2.3x from fiscal year 20 to fiscal year 21, KN has an excess cash balance which allows them to participate in an aggressive share repurchase plan. With fiscal year 2020, KN has been buying back shares without sacrificing funds to support their research and development. In February 2020, Knowles Corp's board of directors approved a $100 million share repurchase program, an initiative that management has aggressively been continuing. At the end of 2021, KN repurchased over 1.1 million shares at an average price of $21.75. Management states that they plan to continue this share repurchase plan as it simulates growth of KN's book value. To reach an intrinsic value for KN, a 10-year DCF model was created. Using a terminal growth rate of 3.5% and a WACC of 6.21%, an intrinsic value of $23.44 was reached. A sensitivity analysis of the terminal growth rate and the WACC of plus or minus 100 bps ranged from $15.40 to $51.25. Additionally, an EV to sales valuation was calculated using a weighted average peer multiple of 2.37, resulting in a relative value of $35.35. Finally, a price to sales multiple valuation was calculated using a weighted average peer multiple of 3.68, resulting in a relative value of $34.76. By weighing these models 60-20-20, a price target of $28.09 was reached, representing a 30.1% upside. Some of the risks that Knowles is exposed to are the reliance on an unlimited number of customers, supply chain, and the erosion of average selling prices. With the reliance on a limited number of customers, Knowles Corp derives a significant portion of its revenues from a limited number of OEM customers. Audio, which accounts for 77% of its total revenue, derives 50% of its revenue from its top 5 customers. If revenues from these customers decrease, operating results can be adversely affected. Within supply chain, Knowles Corp relies on highly specialized suppliers for its components that it needs in its products. KN may not be able to identify alternatives if there were to be a supply chain disruption. And finally, in the erosion of average selling prices, the audio technology sector has traditionally seen price erosion as technology advances. Knowles has offset this by focusing on producing newer and higher-end products. An ability to evade price erosion can have drastic effects on its operating margins. Jeffrey New is the CEO and President of KN. John Anderson is the CFO and Senior Vice President, and Daniel Geske is the COO and Senior Vice President. Mr. New formerly was Vice President of Dover and President and CEO of Dover Communication Technologies from 2011 to February of 2014. Mr. New joined Knowles in 2000 and became Chief Operating Officer in 2007, President in 2008, and President and CEO in 2010. Prior to joining Knowles Electronics, Mr. New was employed by Littelfuse Inc., where he held various positions in product management, sales, and engineering in the electronic products group.